All right, my friends, let's take a look at the performance record of the 712 portfolio that Craig Israelson does. The number 712 was at 712portfolio.com. I actually, had such a great interview with him on the podcast. I'll read some of the comments there too, so you'll get a lot out of that before we start. Actually, let's go ahead and read some of the comments right now. Here, hold on just a second. Some of the comments from the podcast I did with Craig the other day on Saturday. I'll put a link in the show notes for it. Again, this is a podcast that I uploaded on YouTube, so there's no visual. It's just he and I chatting. You can also go to Apple Podcasts, iTunes, whatever, Google Play, whatever it's called, if you want the podcast itself. But I mean, again, this is just a podcast. It's nuts on YouTube, and yet huge amounts of watch time. So here's some of the comments. Brantley says, awesome podcast. I recently discovered Israelson and Paul Merriman. Both of them and yourself provided excellent info. Listen to this from Jeff. Jeff's been a commenter quite a long on this YouTube channel. Listen to the podcast on the Apple Podcast app. This is one of the best podcasts I've listened to by anyone in a long time. I could listen to Craig Israelson talk all day. The guy's just, me too. Profound thoughts and practical ideas for life, says somebody. Inspirational, says somebody. I have to look up and Jimmy says I'll have to look this up and read more about the 712 portfolios. Let's see. Okay. Okay. So this is pretty interesting. Speaking of the fear of run out of money, Josh, you'll like this true story. I was doing some genealogical research on my ancestors, and I found that one of my ancestors was a billion and literally the richest man in Sweden around the earliest part of the 19th century. Sadly, the money didn't trickle down to my generation. When this dude was an old man, he became terrified he would die penniless to the point of absolute obsession. He was a billionaire in his 90s, but scared to death he died poor. He was, of course, one of the richest men in the country when he died. So that's interesting because we talked a lot about the fear of money, actually. So anyway, let's read. That's fantastic. So definitely listen to the podcast. Craig is a great guy, more than just an investment guru. So much more, actually. All right, so here's a 712 portfolio going back 20 years. I won 1999 to 2018. So what we're going to see, how do I make this bigger? Sometimes it gets bigger and sometimes it does. I don't get it. All right, so the 20-year average return. Here's a 712 right here, and this is passive, just passive ETFs. Here's the active, all right? So if you want the active funds that Craig is using, you got, I think he sells it for $75. Well worth your money, I think. Obviously, past performance is no guarantee you get all that. You want the passive ones, you could probably easily identify them yourself, but you can pay Craig $75 and he'll give you all the sheets for that. And you can see the reports he's got here, and you should. All right, so anyway, we're going to start with the passive. It averaged 6.87% a year. $10,000 grew to $37,000 by the end of 2018. Standard deviation, how risky it was from a volatility perspective, 12%. And then the expense ratio is 0.17. So here's his active funds, and active actually significantly outperformed the passive. It averaged 7.5. 10,000 grew to 42,000, a higher standard deviation, which I would, actually, I don't know. Some people say active funds give you more downside risk protection, but not in the last 20 years in terms of standard deviation. Expenses are still a pretty cheap 0.60. All right. Now, if we look at the Vanguard Balance Index, we see it only averaged 5.67. So 10,000 tripled to 30,000, not too shabby. Expense ratio is only 7 basis points, incredibly cheap. And the standard deviation here was about 1.5% less, or about 8% less than that of the balanced portfolio that Craig uses, 712. Now here's the S&P 500. Did the worst of all three, 5.5 at average. Didn't even triple its money. Didn't get above 30,000 in the end of 2018. Much higher standard deviation, 70% higher standard deviation, just a balanced portfolio. And about 40% higher standard deviation than Craig 712, and but a whole lot cheaper. Anyway, I find that funny. Now, what's interesting here is watch this. So you'll see that I'm just looking at the passive now, comparing to the balance. So passive beat it, lost to it. In 2008, it lost to it. beat it, beat it. Now we start seeing it starting to do a little bit worse than the balance index. So basically, the first 10 years, it did much better. And then the second 10 years, it did progressively worse. So we got 2009, it did better. 2010 did better, but watch 2011, 2012, 13, 14, 15. Finally, 2016, it beat it. 2017, it lost it. 2018, it lost too. And the reason for that is because the S&P 500 did better over the last 10 years. So the balanced portfolio of the index, which 60% of it is the S&P 500, smoked us for the last 10 years. But what? It's not as if the last 10 years this didn't make any money. The S&P 500 smoked our Craig Israelson's 712 portfolio over the last 10 years. But here's the issue. The previous 10 years of that, we smoked that. And I say we because I agree with the rebalancing and the diversification. And so at the end of a 20-year time frame, and that's what you got to look at. You got to look at your retirement being 20 to 30 years. You can't just look at it in 5 or 10-year slivers. You got to look at the big picture. The 712 smoked it. Over the last 10, no, not so much. But the reason for that is because we didn't get killed nearly to the extent that the balance index of the S&P 500 did to start our retirement planning. And if we can avoid this right here, that red, excuse me, we're going to be a lot better shape as we go forward for sure. Which is why I love the balanced portfolio, the 712, because it's so heavily diversified that it's going to be, let's see what we can go. It's so heavily diversified that it's going to have some things that take it off and some things that get killed, but in the aggregate, most likely, they're not going to get killed as much. Now, here's 2008. I mean, it's down 25%. The S&P was down 37%. Balance index is 22%, and then the active was down 28%. But even 2008, while it still lost a quarter of its capital, not nearly to the extent of what the S&P 500 did. All right, and so I'm going to go back to the front page here. Oops, there we go. And just give you a visual of how this works. I love it. Now, am I recommending this for you? No, I'm not recommending. You got to know your own stuff. But building investment portfolios like making salsa, I could not agree more. And here are the 12 indexes, or I should say 12 funds. So here are the 7: U.S. stock, non-U.S. stock, real estate, resources, U.S. bonds, non-U.S. bonds, and cash. Cash is an asset class. I can't stress this enough. Here are the 12 positions, the 12 tickers that it uses. And I want to show you the right there. Yeah, right here. See, this is the old school balance, 60-40 stocks and bonds, and here's our new age balanced portfolio. As you can see, a slither, 8.33% and all those things. I love it. And there's just tons of research you can see on here. He's got spreadsheets and everything. It's just a great resource, and you should look at it. So I'm a huge fan. Something you should definitely look into. Buy his stuff here. Let's see. Let's go to Vanguard stuff, or not Vanguard stuff, to purchase. Is it moving? Did I click on it? So let me do it again. There we go. And here you can purchase all his various, right here, his reports. So for you're an individual investor, $250 for a year subscription, monthly updates. I like this one right here. There's the active ETF portfolio, so you can find out what he's actually buying with active funds. But I like this one right here. Individual investor, $75. So if you want the Vanguard, or Fidelity, or Schwab, passive or active funds, here's the 712 portfolio, short reports, 11 pages at $75 a pop. I love it. And here's Craig. You just drop him $75 at PayPal. Man, you can't go wrong, in my opinion. All right. Don't forget to smash if you like it. This is fantastic. So if you're interested in Craig's stuff, and look, I don't get paid on this guy. It's just a nice guy. I like what he's doing. And I think more people would be better served if they follow a model like this for sure. It costs $75. That's cheap money, man. Cheap money. All right, we'll see you next time.